All right, guys, welcome back to We Talk Money. You know, the past couple of weeks, we've seen a really big bounce in the markets, and I think a lot of people are just confused. So today we're going to talk about why the markets are rallying in the face of endless crash predictions. There's a lot of fear out there. Everybody is talking about a potential recession or depression, and the markets just have been resilient. And if you haven't been watching closely, you might not even know, but the past couple of weeks, we saw a really big bounce in stocks. We also had a really big breakout in Bitcoin, and even altcoins are starting to get some love. So guys, are we back in a risk-on environment? Is the recession a long gone, foregone, bygone thingy? Or are we just kicking the can down the road? Where are we and what's happening?
I want to hear Trav's answer to the question, are we just kicking the recession down the road first? And then I can go in with why I think the market has been holding up.
Perfect. And actually, wait, before we do that, I need to remember to do this because last time I forgot, but I wanted to just remind everybody that we are doing a live class tomorrow, Thursday, November 9th at, 7 p.m. And we want all you guys to join us. I'll pull this up right here. You can go to skillincubator.com/live-class. And you'll see this, or you can just click in the description if you're watching the podcast or on YouTube. But definitely sign up for this. We're going to be talking about our best trading and investing strategies for building wealth in 2024. And the biggest thing I think is, we're going to break it down into different account sizes. So if you're starting with a small account or a medium account size or a large account size, basically the different strategies, because we know everybody's in kind of a different financial situation. And I don't know, Nikki, anything else you want to say? Because I think you're going to basically be spearheading this one.
Yeah, like you mentioned, I'm going to be covering different strategies for investing and trading depending on your account size and depending on a lot of other things that a lot of traders and investors forget to put into their computations and into what strategies they're using. So it's going to be very insightful for anybody that's kind of just been winging their trading and investing and they're just hoping for the best. Let's get more clarity and really teach you guys about position sizing and teach you about allocation strategies and just there's going to be tons of stuff baked into the
I'm stoked for it. There's going to be a ton of value. So guys, if you're not registered, make sure to show up. It will be live. We're going to be there hanging out. You can ask us questions and it'll be a good time. So Trav, back to the recession. Where are we? Why are the markets holding up? Are we just kicking the can down the road or what's happening?
Where's the recession, Travis?
I think it's time we're gonna all YOLO into SPY call options, call it a day. It's all gonna work out fine. No, I mean, I think, last week was the best week in stocks of the year. So we've had, at least so far this year, we had the S&P up almost 6%. The Russell index actually participated. I mean, the small cap Russell was up over 7% last week. The NASDAQ, big tech stocks, also up last week. So it was a real barn burner. I mean, there were many stocks that were mooning 10, 20% plus last week. This week, obviously, it's calmed down a bit from there. But, I think the big story last week was that central banks seem like they're finally done on interest rates. And we actually had yields pull back pretty dramatically on the yield curve as well. So that was all very good news. And then in a kind of strange piece of news, we had a weaker unemployment report, which actually led to some of those extra gains happening in stocks as well. It was like one of those bad news is good news situations because, the market's been so focused on higher for longer interest rates, what's going on in the current cycle, that a little bit of economic weakness actually is positive for the market because they can get behind this idea that central banks are finally done. So that was the big rally last week. Now, does it continue? I think there are pretty strong opinions on both sides with pretty good arguments on both sides. But I think I go back to what Nikki said for the past few months, which is maybe we're just in this choppy environment. And every time sentiment gets too bad, you should buy stocks. And every time sentiment gets too good, maybe you should take a little off the table because that strategy seems to be working. And I think It's not clear that we're going into a deep recession yet, but it's also clear that things are weakening around the edges. So I said last week, I'll say it again, I think it may just come down to Jerome and his money printer, or at least what the Fed does with rates in 2024. Are they willing to actually cut rates to help the economy if we do see further weakness, or are they going to be stubborn and behind the curve again? And ultimately, I think that will determine how deep the pullback in the economy and markets can go.
Well said.
I think
And
that this
Bitcoin
is
seems to be, just really not caring about the stock market. We saw some inverse relationships. We've seen it holding up. So we can talk more about crypto here in a second, but Nikki, anything to add to the kind of the macro picture?
Yeah, I mean, Trav made a lot of great points, and there are many reasons why when we broke down through 4,200 and S&P 500, we were on the podcast when it was happening, and I was like, yeah, this looks weak, but in updates, I've talked about how I can see this market not getting to the 2022 lows and just kind of chopping around, and in fact, getting to the 2022 lows would have been a great buying opportunity, an excellent buying opportunity with the knowledge that we have right now, in my opinion. So I get why the bears are frustrated, because the news and everything should be the valuations, everything should probably be bringing this market down. But I do think that the bad news is good news scenario could end up being kind of different than we've ever seen before, with the way that people have been kind of pummeled with these high interest rates, right? So we're not at this point where everything is falling apart. There are many things that are slowing down and cooling, including the labor market. Even oil prices are cooling, but oil prices cooling is good for the consumer and good for the argument that inflation is going to stay tamed and declining. So I think that the bad news is good news could float this market, as long as things just don't get too bad, right? Of course, my argument is the labor market is cooling, but it's still holding. Like if you look at my tweet, I kind of outlined all of the things, and one of those items is that the unemployment rate, even with the latest spike in unemployment, I wouldn't even call it a spike, tick up in unemployment, we're still at historically low unemployment, and we're still seeing jobs being created, albeit maybe not at the same pace, but it's all still kind of chilling and cooling, but not falling apart. So I do think we are going to see this with the stock market, that if that continues and things cool but don't fall apart, I just don't know if I can see a big crash coming like the bears are predicting. I think that we can have a slowing economy without a full-blown bad recession, especially if yields cool off and come down like they have been. But yeah, this is kind of my list of why I think things have been holding up. I think people forget about earnings being the crux of how the stock market trades. And right now, earnings growth for 2024 has ticked down slightly. So that's going to probably continue, and we're probably going to see those estimates continue to come down. But we have so much room to still see positive earnings growth in 2024 that I think that, we could just be looking at the market holding in this range.
Okay, so let's run with that thesis. Let's say that things don't fall apart and we still want to be risk on over the next year. What does that look like? What areas of the market are we excited about? Where do you guys see opportunity? And I think a good place to start is with the Daily Doe issue that we actually put out this morning. There was actually kind of two big themes in there that Travis and I wrote about. The first being the big release from OpenAI and just the continued speed up of the rate of change and just some massive things that they've been putting out. Also, Trav wrote about the dating stocks, which have been absolutely beat to death. So I think, what we're looking for is not just stuff that's popular, like the AI stuff, but also things that are kind of unloved or beaten to crap, and even certain parts of the crypto market we can take a look at. But I just wanted to start by kind of talking about the big stuff that happened with OpenAI and ChatGPT this week. I think every now and then there's an announcement or a release that, we can look back years from now and say, wow, that was actually a really big moment. And I got that feeling with OpenAI's developer conference this week, where they started talking about custom chatbots and how you can create your own chatbots and even make money by giving other people access to them. And this is the start of GPT agents, where they're actually going to be able to do more functional, like real life stuff. So it's going to be, instead of just having a chatbot to like interface with, these GPTs are going to have the ability to actually start basically being your assistant or taking on different roles. And I think what this is going to do is further enable like solopreneurship and just helping people scale and spend less time on like the boring kind of low payoff tasks that allow you to focus on like your highest and best use. So that's something that I'm super just diving into the deep end and trying to understand everything. And I feel like kind of limited opportunities to invest in this right now, but I think there's legacy plays, right? Like Microsoft, Nvidia, stuff like that are already publicly traded. There's also startups. If you can get your hands on, a company like OpenAI or anything in the space. But that's just something I'm really excited about. What do you guys think? Have you been looking at this, or do you have any opinions on it?
Yeah, I mean, I think it's pretty freaking exciting. There's everything that you mentioned with a lot of the agents and being able to do domain specific tasks is really, really interesting and exciting. But even some of the stuff like the GPT-4 Turbo and reducing the cost of using these tools and APIs, and then being able to actually have more data and more context being sent through the APIs helps to just make all of this better. And so it's like every time they do one of these big updates, it's like a step function in capability. And so like there's just going to be an explosion in the next couple of months of actual tools that we can use in real life. And this has been, I think someone said that more has happened in the past year in AI than in the previous 10. And at least from my vantage point, I think that's absolutely true. It's funny though, because even like your average citizen probably still hasn't been impacted on a day-to-day basis. They're probably still not using the tools on a day-to-day basis. But I think when we look forward like 3 to 5 years, I think, whether they know it or not, they're going to be using these tools. We know that Apple has been quietly behind the scenes tinkering with maybe improving Siri and adding some of their own flavor to their iPhones, which may come out next year, year after. Maybe that's what it will take for your average consumer to actually use these tools. But people that we know that are on the front end, and people like us that are actually sitting here playing around, figuring out how we can do interesting things and automate and get more efficient. There's still just so much potential to be had here. So like, don't ignore this space. Like if you're an investor, or even if you're not a full-time investor, like play around with these tools and figure out where you can use them and improve your own processes, because you're going to have a leg up on everyone else if you do that. So yeah, it's really exciting.
I agree. I mean, I basically have several GPT tabs open all day, every day. And it's amazing the ways that I've figured out how to use it, from just thinking through stuff and developing. And I don't know, man, it's just endless use cases. And even this week we had Twitter/X/whatever release Grok, or announcing Grok. So I know Elon's been working on it, and we're going to have like a battle of the AI interfaces. And I don't know, this space is just super entertaining to watch. And then the second thing that we wrote about, which Trav, I know you've been doing a lot of like deep dives on, is dating stocks. So Match, Bumble, Tinder, stuff like that. These stocks have just been absolutely beaten to crap, while the percentage of couples that have met online is still going parabolic, which I think is super interesting. And even the founder of Bumble kind of got ousted this week. So, Trav, what's been going on in this space, and where do you see opportunity and risk?
Yeah, pretty interesting sector. Nikki and I have been watching this sector for a couple of years now. Both Match Group and Bumble have been public for a couple of years now. Match Group, of course, is interesting. They're sort of like between Match Group and Bumble, this is basically an oligopoly if you're looking at dating markets in North America and Europe, because, Tinder or Match Group, which owns Tinder, Hinge, OkCupid, Match.com, The League, and a number of other dating apps, they have most of the market share. And then besides them, Bumble basically takes up the rest of market share in terms of online dating apps. So it's a really interesting industry structure. And yet, these stocks have been crushed. They're both down about 80% over the past 3 years. So when I see something like that, when I see a mismatch between an industry that's an oligopoly industry where there should be a lot of pricing power, a lot of profit potential, there's been growth in recent years, and yet the stocks are down so much, then that gets my spidey senses tingling. So we've been diving into these. We wrote a little bit about the Daily Doe. I'm going to continue to do some more work on this industry, but I think it's gotten pretty compelling from a stock perspective, in my opinion, because these stocks are trading between 10 and 20 times next year's free cash flow, very cheap levels, particularly if you think this industry will remain an oligopoly industry with these two players dominating for many years ahead. And so, yeah, I think it's pretty interesting setup. And then, of course, you mentioned Bumble could be interesting too, from the standpoint of maybe the CEO change could be a catalyst for them. Of course, we've got some interesting things happening over at Match as well. So yeah, I just think it's a really interesting sector to hone in on at this moment in time. And we try to find those mismatches between like stock prices and long-term potential. And more often than not, that tends to work out pretty well.
Absolutely. Nick, what have you been looking at?
Well, in terms of individual stocks, I've been picking up some Chewy, and I picked up some Ulta, some Target, a lot of retailers. That's kind of my forte, is the consumer discretionary sector. So, I like to get them when they're down. When they're beat down, I like to pick them up, and that's my strategy, because it's all very cyclical in that sector. But yeah, a lot of that has been going on. But I've been kind of just waiting things out in the market to see how this dip is going to go. But it's completely surprised me, and now at this point, I just have to kind of wait for a pullback to see if any other opportunities arise. But I have been definitely picking up the retailers.
Nice.
Quite a few of them. Yeah.
There's a lot of interesting like themes and basically just like under the radar things happening in the market right now, even though the indice is a little bit boring to start the week. Obviously, they had a crazy week last week, but there's just a lot of storylines, I think, underneath the surface that maybe if you're not paying close attention, you're missing. Things like we wrote about in the Daily Doe last week, the Spirit Airlines JetBlue situation, which could be extremely interesting and compelling from an investing standpoint. One of the wildest merger arbitrage situations we've seen in a while. Looking at like also something like the WeWork bankruptcy, very, very interesting. A lot of bad takes on Twitter about what that means. The company is going to reorganize, and they actually have a restructuring plan they're already working on. So I think that one is an interesting one. The stock, I think, is probably the existing stock is worthless in my opinion, but nonetheless, like there's all these things happening like that aren't really getting that much press in your mainstream media that I think are really interesting to like dig in and research and figure out what the heck is actually happening. It feels like everyone seems to be asleep at the wheel. I'm not even seeing that much commentary lately on Twitter about individual situations like this. So I think it's actually a really interesting time to be, focused and looking at some of these situations.
Do you think people are just too distracted with the recession argument, that maybe they're just missing kind of all of this that's happening in the underlying?
I think that could be a big part of it. Yeah. I mean, you look at what trends on social media, it's always the most doomer perspectives. And I think that is really having effect on people or, maybe they're just over in crypto land, enjoying the run there and not paying attention to stocks, which is also fine.
But it's funny, if you asked like your average person how they thought Bitcoin or crypto, most people tend to like lump all that together. If you ask them like, hey, how's crypto doing? I think the average person would say, oh, it's dead. It's dog shit, right? Like the FTX situation, all the SEC lawsuits, like people wouldn't really think and know that Bitcoin is up over 100% year to date. We're up 115% so far this year. And even alts are up, 35%. So, the sentiment definitely trails price performance, right? Like, Trive, you talked about this in the stock market when you were at the hedge fund. It was like by the time the market bottomed out, we were well into a year or two later that the economic data actually started to improve. And I think market sentiment is very much the same way. Whenever I talk to like normies or people that aren't in the markets every day, they're like, oh, Chris, are you okay? Bitcoin, I know it's beat to crap. I'm like, what are you talking about, man? It's up over 100% this year. We bought the dip at 19K. We just had another big breakout. And so, yeah, it's even though the top in the market was literally like 2 years ago this month, I think in a lot of people's minds, there's still just a lot of negativity, but things have really started to bounce. There are several alts that have had some pretty large moves, and I've actually been playing this more conservatively right now. But we have built a watch list and have a lot of positions that we're paying attention to, and I think we are not in full altcoin territory yet, but we're definitely starting to see some risk capital come back in the markets. Even if we look at the total 3 chart today, I mean, just in the past couple of weeks here, this is up over 25%. So there's definitely been a pop. The question is can we get above this like 450 billion kind of resistance level in alts? If we break that, that's where I think that kind of euphoric activity would come back in, and we'd be in a full on bull season. But nothing has changed. Like ever since we shifted from bear price structure to a bull market, which actually happened like the first half of January. So basically right off of the year, I mean, things shifted and were strong, and they've been strong ever since then. Even though we had about 6 months of kind of consolidation, we've been in bull market territory pretty much the whole year. So it's been interesting to see how, even if you look at like, like Coinbase or CoinDesk and other, popular like news sites, a lot of the headlines are still just negative. So yeah, we'll see. I mean, we've got about 6 to 9 months until the halving, not even that long. It's going to be end of April next year. So we're coming up on it, and price action is doing what it does based on the halving cycle. So no surprises there.
A lot of people have been making fun of crypto people because, everyone's like, crypto's up 100%. And like, but it was down, 80%. From the highs or something like that. So I think people though miss that people investing in crypto are so used to that, and it doesn't really phase them as much, and they see those corrections as like huge opportunities, especially with things like the halving and that. So people that are kind of crapping on it, I think that the people that are actually in crypto just see it so much differently. And there's the big drawdowns that you have to deal with, but they're so used to it.
Yeah.
It's different than stocks. Like in stocks, everyone freaks out, but in crypto, they don't.
Right. Well, for us that have been in crypto for a long time, it's like this month is 10 years since I wrote my first blog post about Bitcoin. And it was actually a bearish blog post because Bitcoin went from like $100 to $1,000. And I was like, it was basically a warning post saying like, hey, I get it. I'm bullish on Bitcoin long term, but guys, we're in a bubble right now, right? So I've been doing this level of like crazy volatility and seeing this shit and seeing all the the Bitcoin obituaries for a decade. So yeah, I'm dead cold to it at this point. But there are some things in crypto that deserve to be made fun of and deserve to be criticized. Like when you have an implosion at a centralized exchange, or people that go into debt to buy NFTs at the highs for hundreds of thousands of dollars, right? So yeah, there is some shit that is absolutely ridiculous and deserves to be criticized, but all you got to do is zoom out and look at the compound annual growth rate of Bitcoin, the risk adjusted returns, and at this point, it's hard to be critical of it.
Do we know how NFTs are doing? Are they still pretty disastrous in terms of
I'm
price?
glad you asked. Yeah, the volumes are
I
still
haven't
very
even paid
low.
any attention.
Yeah, I mean, look, the profile pictures have had a little bit of a bounce if we kind of zoom in, kind of with everything else. But
I've never heard you call them that.
yeah, I mean, that's basically what most of these are, right? And look, I get it. At a certain level, I get it. Am I going to put all my wealth into profile pictures? No. The ones
Sorry,
that
that's really funny.
yeah, I mean, it's true. And look, I think there is absolutely a use case for NFTs, but we're just going through that hard learning curve of figuring out which ones are actually going to have value. And we saw a lot of influencers do some kind of shady, like, cash grabs. I mean, I love Gary V, but he did a big one. Even Tom from Impact Theory, he has a big lawsuit from the SEC from his kind of pump and dump thing. So yeah, like, a lot of this deserves to be criticized. But one thing that I am still bullish on is the gaming sector. Well, I've talked about this a lot over the past couple of years, is how gaming is massive. It's bigger than movies. It's bigger than music. And if you can integrate, verifiably scarce assets in a game that people really give a shit about, yeah, that stuff's going to have value. So that's where I'm putting my focus. And we've actually seen gaming cryptos really start to pick up over the last couple of weeks as well.
Can we take a quick look at the Bitcoin price action, like, in a little more detail? I'm curious to hear your thoughts on how you're viewing this potential breakout, or I don't think we've had that secondary breakout yet, but I guess we have a little bit. Yeah.
Yeah, so
It's kind
I'll
of interesting, the
do a
price
couple of
action.
comparisons. Yeah, so let's go into a little more detail about Bitcoin's price. So basically, here's what's happened with Bitcoin since the beginning of the year. I have this chart with a bunch of notes on it. So right here in January, we broke above the moving averages. We started making higher highs and higher lows. And then we had the quote unquote banking crisis in March, which gave us a great buying opportunity. So I bought that, took some profit, kind of scaled out a little bit. And then price action has basically been flat since mid-March. So that was basically for over 200 days, we had 28K that was a magnet. We saw, bear traps where we had fake out breakdowns. And then we had short squeezes, and then we had resistance at 32K, which created a bull trap, so a fake out breakout. And then it wasn't until we started to get the ETF rumors and saw the DTCC listing and things like that, where people said, yeah, we think, the ETF is inevitable. And then that led to this big breakout. And then you can see over the past really just couple of weeks, we've been consolidating in a bull flag. So it's been, just over 2 weeks, and price action is holding up. So I've outlined for the wealth building community a few possibilities and outcomes, and basically how I'm planning on trading this. I actually did start to scale in a little more up here in anticipation of a breakout, but I have a lot more room in case price pulls back to retest that 32K breakout level. So yeah, I mean, look, overall, I've been bullish the whole year. We had just a few moves because we had such a long consolidation period, but I actually love long consolidation periods because we need them. The longer the consolidation, usually the bigger the move once we do get a breakout. So one thing
That's
that
a
I
good
also
point.
One thing I also
Because go ahead. Sorry.
one thing I outlined is kind of an example of kind of what this looks like is like back in 2019, we shifted from a really long bear market after the 20K top. We were down in the 3K range, and then we had a market structure shift back into bull. And then we got this bull flag that was holding up in the face of bad news. It was like, I think it was a Binance hack, or that there were several things that were happening here. And we just noticed that, oh, okay, Bitcoin's price is holding up. And then that led to a multi-month bull run. So it kind of looks like that's what's happening now is, we had a big breakout and price action's been holding up. But I think a lot really also depends on what stocks do here, because we've had such an aggressive bounce in stocks where basically for, a week and a half of just straight green days. And now a lot of the stock indices are actually testing the 100 period moving averages resistance. So I think Bitcoin's bull flag right now depends on what stocks do over the next week. If they put in this lower high and then we get an aggressive sell-off to retest lows, I think Bitcoin is going to go with it because they typically panic together. Whereas if stocks hold up or even squeeze, I think that's going to give Bitcoin a much higher probability of actually breaking out above this bull flag to 40K. So that's kind of how I'm thinking about this.
I guess what I was going to say earlier is that you made a good point on the consolidation period being long and how, because when I look at Bitcoin's price action right now, it's like, oh man, this thing could fall at any given moment. Like it kind of looks like it's holding up, hanging on by a thread, trying to get higher and higher. But any minute, we could see it just pull back and retest. But it did have such a longer consolidation period that Bitcoin's done this before where it has these big pops and you think to yourself, oh, this is gonna pull back, like it has to pull back. And then it just doesn't. It just keeps flying. It's like just one of those things that's very unique. And I think that long consolidation period that we had could kind of surprise a lot of people for this price to hold up, especially like you said, if the index holds up.
Right. And another example is like back in 2016, we actually had most of 2016 was kind of boring, even though it was a really beautiful bull market. We had one consolidation period. Look at that, right around 200 days.
Yeah.
And then we had another consolidation period going into 2017 of just shy of 200 days. So Bitcoin likes to do that. It likes to make big moves. So it went from, call it 200 to like 500. And then needed time to coil up. And so that's why, yeah, sure, I'd love for Bitcoin to be moving every single day, but you don't need it to. You can just really let these consolidation periods do what they do best, which is allow the tourists to get bored and go away and then miss out on the big moves. And this is actually something that I tweeted about yesterday, was how, I was thinking about this, how price action is a bitch. And what I mean by that is I said, I've been trading with TA for 22 years. Here's one thing I've found to be true across all markets, all time frames, and all chart types. The market will do whatever it can to cause pain in the most amount of market participants. So basically what that means is like, it'll try to make runs that trap people, that hit stops, that create big inflection points, and basically try to take people out before a big move, or hit stop zones and then capitulate and move back in your favor, or fake out and then break out, or entice people into bad trades. And I forgot what the point was that I brought that up, but I just wanted to add that point.
No, that's absolutely true. That's why people that use hard stops, and have, stops below support zones and stops above resistance zones if they're, short or whatever, 9 out of 10 times your hard stop's going to get run.
Yeah.
I've ended up having in the stock trading world, having to adjust my strategy to where I'm either not using hard stops or I'm putting them in such a lower place than I would originally to kind of allow for that fake out, because I mean, it even happened in stocks when we broke down below 4,200, fake out breakdown.
Yeah.
It happens. And then everybody was piling short, doom and gloom. Everybody was thinking we were heading lower, gonna crash, and they ended up getting squeezed. So that is what the market loves to do. And you have to be really good at technical and fundamental analysis to kind of work your way around that.
And one thing I like to do is just ask, what could the market do to cause people pain? I'll look at the chart and I'll say, what is obvious here and what could become a crowded trade? And if the market traps all of these people thinking this, what could happen? And then you can also kind of like identify stop zones where stops could get run to. And I think if you think like that, if you think more of like, how can this price action hurt people? A lot of times it's really interesting how accurate that can really be. So, all right. We've talked about Bitcoin.
Trevor's a fundamental guy, so.
Yeah. Hey, I'm letting y'all take the reins on that for sure. But I agree. We've seen a lot of those types of situations in individual stocks where, the market will push hard enough in one direction to cause like forced selling or things like that on investors that, creates opportunity ultimately.
Yep. Hey, I wanted to ask you guys before I forget about the electric car space. So, I've recently been seeing how Ford Lightning is really tough. Like they're just not selling. Rivian, and what's the other one that's beat to crap?
Lucid.
Lucid.
Lumen is also beat to crap, but that's not an EV. That's not an EV manufacturer.
Even Tesla's been pulling back a little bit. What is your read on this space, and what do you guys make of it?
Yeah, I'm a bad person to ask.
Well,
I'm too biased.
There's two fundamental problems facing, like, especially the pure play EV manufacturers like Lucid and Rivian. Two main problems. One, they're not at profitability yet, so they're not at the level of scale that they can actually be profitable. And then the second one is they're actually starting to see some demand issues because, EVs are expensive. The reality is, like, a lot of the EVs in the market are quite expensive, particularly things like the F-150 Lightning or even the Lucid cars, very, very high priced vehicles at a time when the consumer is less and less willing to pay up for high priced vehicles, especially because when most consumers go and buy those vehicles, they finance them in some way, and financing costs are through the roof with interest rates through the roof. So you've seen commentary from everyone across the industry, whether it's lenders like Ally, or it's the manufacturers of cars, or it's the parts manufacturers. They've all been basically calling this out for a number of months, that it's getting more difficult on the revenue side because, these high priced vehicles have become a problem for consumers. So yeah, I think that's a big problem. And then the scale issue, I see some other issues too. I think, a lot of the traditional auto manufacturers have come to market in a very weird way with EVs. They either created vehicles that really didn't seem to be well marketed for the mass market, or, they priced them too high, or they didn't make enough initially, like all along the way, or they made them ugly, or like, things like the Ford Mustang Mach-E. Why did they apply the Mustang name to a hatchback looking
Blasphemy.
EV? Yeah, just, there's really strange decisions that have been made all along the way. Of course, the script hasn't been fully written. Ford and a lot of the traditional auto manufacturers are still committed to EVs. They still think in a couple of years they can flip from losing a couple $1 billion a year on EVs to actually making money. But right now, look, I mean, the Tesla bulls are right that most of the other manufacturers have not gotten this right. So you got to give Tesla credit where it's due. But even Tesla's starting to face some demand issues, starting to bump up against, unrealistic estimates of where they can take demand in the short run, and consumers are pulling back.
Yeah, well said. Yeah, it's a space where, regulators and governments are pushing to make it basically the way forward, right? Like California, Europe saying, was it 2035, all gas cars are out the window. And I don't know if I see that happening that quick.
No, I mean, you could try to mandate it all you want, but as a consumer, I was out in the marketplace looking for a vehicle just in the last couple months myself. And even though there's these EV credits, it's completely wiped out by the fact that all the EVs are priced 10 or 20 grand higher than the non-EV models that are the same kind of car. So, until they can fix pricing, and they can't fix pricing without losing more money, I don't see how penetration is going to rise that dramatically over the next 5 or 10 years to try to meet those, regulatory demands. And so even the automakers are starting to push back on regulators being like, yeah, these targets that you're setting, like, I'm just not sure we're going to be able to meet those. Oh, by the way, it's not like EVs are going to save the planet either when the grid is still being fed by, coal and natural gas primarily in a lot of different regions. And so, it's yeah, I have a lot I could say on this, but
Yeah.
there's a reasonable middle path here. I'm not on the side that says EVs are dead and no one should buy EVs. I think the auto manufacturers have to figure out costs, and then they have to adjust to what people actually want. Like, if you give me an opportunity to buy an EV model at parity with a normal model, yeah, I'll actually consider buying one. But until then, like, why am I going to pay more for more hassle?
Absolutely. Yeah, I
And
can't get
that's the
there.
key word, hassle. It's
Yep.
like with the charging issue, it's a hassle. Like, we were just on a road trip across country. There's no way in hell that I would have wanted to do that in an EV. Like, there's just no way. So I think that they have to solve that issue as well, with the range that these vehicles can have and how quickly they can charge, and where the charging stations are, going to be. How accessible is it? So
Yeah.
I think that hybrids are performing really well because
Yep.
it's kind of the best of both worlds, where people can get gas if they need to get gas, and they'll be able to get that range that they need. So that the market could end up moving more towards hybrid, in my opinion, but because that seems to be pretty successful.
Yeah. Well said.
Awesome. All right. I've got a Reddit question. I think we got some good feedback from the questions we answered last week. And this is one that I think is kind of interesting because I know several people kind of in a similar situation. But the question is this: it's a 35-year-old guy with a $10 million net worth and seeking fulfillment beyond wealth. Goes on to explain he's got a couple kids, breaks down the asset classes, 6 million in equities, looks like maybe 2 or 3 million in angel investments, got a house a little bit less than a million, half a million in crypto. And the question is, I'm curious to hear from those who have attained financial success but find themselves mentally unfulfilled. What steps did you take? What did you alter in your life? And this is actually something that one of our members in the wealth building community was asking about, like the perfect average day and what that looks like. And I think that's kind of my answer to this is, just think about like what your average day looks like and try to optimize for that, right? Because you're going to have highs, you're going to have lows, but like, what are the things that can fulfill you on a day-to-day basis? Think about the different categories, right? Like fitness, learning, obviously family, friends, community, right? But he goes on to ask and like kind of clarify, should I get a new job? Should I shift my focus to minor aspects of work rather than the overarching picture? Should I do a gratitude journal? Spend more time in nature. So I wanted to kick this around, see if you guys had anything to add. But it's interesting to just see, like, there's a lot of these posts where people have built some pretty awesome wealth for especially being in mid 30s, and they're struggling with kind of the fulfillment side of the picture. So what do you guys have to add?
Yeah, I feel like we kind of had a similar question from Reddit last week. And I think, my answer is probably going to be similar. Like, it's a big, wide world out there. go explore, go like try things. You're not going to know what's going to be fulfilling until you try some stuff, whether it's traveling or picking up a new challenge or sport, or like you said, learning a new subject, whatever it is, there's a million different ways or a million different things to explore to try to seek out that fulfillment. And chances are, you'll find it if you look for it, but maybe not. But hey, you can't just sit around saying that you're sad and unfulfilled and not doing anything. So yeah, easy answer for me is just go try a bunch of stuff, see what sticks.
Yep. That's what I love about investing too, is like, it's hard to get bored because there's always something new happening. And so if somebody enjoys learning or enjoys like trends or just looking for the next big thing, that's where I think investing as a job or as something that you really focus on as an active investor can not just be fulfilling, but also like the biggest challenge and, just a great way to drive yourself to be better and learn more.
Well said.
All right.
Sorry,
well,
guys. I think are you there? I
Yep.
think I've had this
Did we lose you?
delay. So I'm sorry if I've had a delay this whole time. So if I've talked over you, I apologize. But
No worries.
if I could chime in on that really quickly before you wrap up. One of the first things that we do in the financial planning process is we figure out why we want the money. And I feel like sometimes people do this backwards. They just make the money, make the money, make the money. And then they look back and they're like, why did I do all of this? So I think that the first step in the process, if that hasn't already been done, is to kind of, like you've mentioned, work through your perfect average day. What are the things in life that bring you the most joy? And does your money give you that chance to do that? Right. So I think everybody needs to start with that first. Why do I want this money? What do I want to do with this money? What are the goals for this money? And what do I want my life to look like in certain, areas of time, when I'm retired, when I'm before retirement, when I'm whatever the stage is. So I encourage anybody to, if they haven't already done that, to go back, and they're working hard for the money, but why? And that kind of helps you get to what is the most important to you and how you want to be spending your time with things that bring you the most joy. But yeah, trying things is definitely a part of that equation to figure it out if you're not sure.
Mhm. Well said. Well, I think we can go ahead and start to wrap it up there. We covered quite a bit, and I know we're getting pretty much through earnings season, right? Any other developments since last week?
No, same themes. The same themes continue. Like if you miss your earnings, your stock's getting whacked hard. If you meet expectations, oh, you're lucky if your stock's up. If you beat expectations, you might see a massive move. But yeah, it's a high bar this earnings season. But hey, it doesn't look that bad in aggregate. So it's hard to get much direction from earnings right now in Q3. But people are a little more cautious about Q4 in corporate world, so that's definitely worth noting. But yeah, it's not giving us a whole lot of signal as far as like, should we put the chips in or not?
Yeah.
Yeah.
I don't
Okay.
know if you saw, Trav, but Yardini, it looks like the earnings estimates went up 30 basis points for 2023. So we're actually seeing 2023's earning estimates slightly up, believe it or not. Not by a
Yeah.
lot, but much better than expected when we were looking in January, right? In the
That's
beginning of
right.
the year, things were looking pretty dire, and we thought we'd be lucky to get flat earnings growth this year. And now we're looking at, 1%, which isn't great, but it's
It's
better
something,
than what
right?
we thought.
Yeah. Yeah.
So if corporations have a banger Q4 with the holiday season, who knows? That's going to be really telling to see how consumers spend through this holiday season.
Yep. Agreed. 100% agree with that.
Awesome. All right, guys. Well, we'll go ahead and start to wrap it up there. Again, for anybody that is looking to build wealth in 2024, don't miss this class that we're doing tomorrow, Thursday the 9th at 7 p.m. Eastern time. You can either click the link in the description or go to skillincubator.com/live-class. This is going to be really fun. We're packing a ton of value into this. So hope to see you guys there. Also, go to wetalkmoney.com, leave a question for the show, and leave us a review on your favorite podcasting platform. I think we're pretty much everywhere. And yes, we will wrap it up there. Guys, thanks for adding a ton of value to the show. Appreciate you both and appreciate all you guys that listen and watch.
Yeah, thank
See you guys
Cheers.
next week. Take care.
Thank you.